Yo, yo, yo. What's up? What's up? All right, I'm just gonna let a few more people get in here. Sally, what's up, brother? LB Swervin, hi, what's up? What's up? Florin, hey. Mocha Pital. Hopefully, I'm pronouncing your name correctly. What's up? What's up? Waiting to see what do you think for next week. Yeah, I'm excited. I'm excited to look into it. Shady or Shady? 24. Got you. Can you give me a complete roadmap to learn ICT? I have a full course with literally everything that you need ICT. I also have free YouTube videos. So it kind of comes down to what route you want to go, but everything's out there. I would say the shortened learning curve is my academy and course, but the everything's out there to be found, right? So I give away pretty much everything that I know on YouTube, in these streams, in the videos. But the live trading in the Discord and then the course is like organized, shortened learning curve, fast track to get there. Through the YouTube and free content, you kind of have to like decipher it and go through it at your own pace. But in terms of a complete roadmap to ICT, my advice would be only use the concepts that make sense to you. Only use the concepts that you deem are necessary. So like for me, all I deem is necessary is swing points and fair value gaps. I don't need to add standard deviations. I don't need to add all these other things, discount premium, whatever the other concepts he uses, new week opening gap, all that stuff. I don't need any of that. So the roadmap to learning ICT is kind of deeply understanding it and then simplifying it and catering that to fit your personality. So something you guys are going to hear me talk about all the time is taking things and tweaking it to fit your personality, because I think that is one of the biggest things that nobody talks about. I mean, I can confidently say you guys have probably never heard someone say that. I mean, maybe you have, but for me, like, I've never heard anyone talk about truly catering a model or catering concepts or strategies, approaches, whatever, to fit your personality, because it is one of the most important things that you can do. Just because something works for you doesn't mean it'll work for the next person. So, just because I find success trading a certain way doesn't mean that you'll find that same success, because we have different brains, we have different personalities. So one of the biggest things you can do with learning ICT is taking it and making it personal to you, making it make sense to your tendencies. But yeah, that's my rant. All right, let me just tweet this link out. What's good, Hermes? What's up, brother? I like how you put that. Appreciate it. Yeah, bro. It's really important. Like, probably one of the most important things that I just feel no one talks about. Because just because there's a profitable strategy doesn't mean that's going to work well for you. There's mental barriers. There's certain things that someone may do well with a strategy that another person will not. It's not just like a cookie cutter, oh, take this and have success with it. It's take this, find ways to make it personal to you, find ways to allow you to submit to that model and have confidence in it, and run with that and scale it to the moon. What's up, brother? What's up? Cam with a K is crazy though. That's kind of fire. Some of my friends call me Bam with a B. What strategy or model is simple and best for beginners? I teach multiple things on the YouTube. I would just check out my videos on the YouTube if you haven't yet, Star. First you need to identify what your personality is. So do you prefer to have kind of instant gratification in the sense that you want to see if you're correct or wrong with your trades fast? If that's the case, you should be scalping or intraday trading. If it's not the case for you and you actually prefer to wait and be more patient with your trades, you should be swinging. But I think that is the first thing that you need to be addressing, is figuring out what fits you and what are you looking to do. From there, you need to just find simple concepts. I personally think you're in the best place to find the most simple approach to ICT. I think that what we have here on this channel, on my social media and what I teach, is the most simplified and beautiful version of ICT that you'll find. I genuinely believe that. I can say that with my chest. I think that what we're doing here is amazing. You're not going to find something more simple than this. It's gray box and a gray line. It's for value gaps and swing points, and we just call major financial markets. So it's not ego at all. I promise you. I can, let me make that very clear. It's really not ego at all. I'm just making it extremely clear to you guys that you can make this stuff simple. I only trust for value gaps. That's all you need, bro. That's all you need to trust. You don't need to put your trust in anything else. Trust the fair value gaps are the institutional footprint of price. It's telling you that banks are involved. It's telling you that price has intention and energy. I don't know what else we could need other than that. That alone is all that you need. All right, let me catch up on the chat and then we'll get it going. Man. First time here on your channel. What's up, Frank? Appreciate you tuning in, man. Hopefully you find some value here and choose to stay. If you do, I appreciate it a lot. I really just try to over deliver on value when it comes to this channel and the content that I put out. But maybe it's better to focus on what you're using. Simple concept. Yeah, absolutely. When you have a simple concept, when you have something that is simple and repeatable, it allows you to put your focus on the things that are the most important, which I would argue is, one, risk management, because that's your shield. Risk management is pretty much the one thing that you can fully control. You can determine what your downside is for every trade, barring that you don't get slipped and that you don't trade through huge spreads or whatever. But assuming that you aren't ever going to get slipped, which you shouldn't if you're trading at the right times, that's the one thing that you can fully control is your downside. And so that's the first thing that you need to be focused on. The next thing is your mental. Now, that is a tougher thing to control. Obviously, we can control and sharpen our mental game, but it fluctuates. Your mental game, your mental sharpness is going to be volatile. And so those are the two most important things that you need to be focusing on. And when you have a simple strategy like what I teach here on this channel, you can put your focus on the things that are actually going to make you profitable, which is managing your risk and actually, keeping that mental edge, because it's volatile. Your brain is not going to be perfect year round. You're going to go through drawdown. You're going to go through losing streaks. You're going to go through highs and lows off the charts. We're humans. We go through all these emotions every single day. But all right, I'll stop ranting here. I learned about high probability for value gaps from your content. That's awesome. I love that. Should I watch ICT's videos or else? So ICT's videos are great. You're going to have to put in a lot more time up front because he rants. I think ICT is a good dude. I don't necessarily think he has the best teaching approach. He gets his ego involved a lot. It goes on rants and kind of has to like, I don't know. I don't want to talk bad on him. I think he's a great dude, but I would watch ICT's videos if you're the point I'm trying to make here is I would watch it if you're okay with investing some time, because it's going to take time. He drops gems, he drops gold in some of the videos, but then he'll go on a rant for 3 hours. And so it comes down to what you want. If you want a fast track at learning ICT, I highly recommend my content and, you know, people that are not going on rants. Like I'm kind of going on a rant here, so I'm being a hypocrite. First time here on your channel. Fire. I read that one. Awesome. Appreciate you tuning in, Frank. Because in his videos, he was talking too much off topic. Exactly. Yeah. I love ICT, but it definitely does that. There's no denying that. Especially when he gets in his modes. Like that, bro, just be talking for real. Like he just, bro, just be talking. Yeah, you can literally do anything with this perspective on price. The way that we perceive price is fractal. You can scalp. You can have a scalp strategy with this. You can swing. You can trade intraday swings. You can do literally anything that you want flooring with it. It just comes down to the time frames that you're using. And so if you want to be swinging, enter on the 4-hour daily, 1 hour. If you want to be scalping, enter on the 1 minute and 5 minute and trade these short-term fluctuations in price. But everything that you could need is in the way that we perceive price. It's just about formulating it in a way that is how you want to trade, if that makes sense. Here, I'm gonna switch over the chart. You guys can see me, and then we'll talk about the news, and I'll keep going with the chat. Let me get my thing. I want to get the economic calendar pulled up. That's good. All right. How long have you been trading? I started trading officially, like getting involved in trading 2019, but I really wasn't invested in full go every single day showing up to the charts until like 2020. So 2019, I was like gambling on options on my phone. If you guys know what Robinhood is, I'm sure a lot of you do. 2019, I was like using Robinhood and just gambling on Apple and like Tesla and all this stuff. Like all the major large caps I was gambling on in that time window, like 2019, 2020. 2020, like later towards the end of the year, middle of the year, I started to get very, very invested in trading. The first thing that I started learning was supply and demand. I remember I bought this like $400 supply and demand course. I don't know if you guys have heard of InvestiTrade or Carmine Rosado, but shout out to him. That was the first course that I ever bought, the first community that I was ever involved in. I believe that was the end of 2020, if I'm not mistaken. It's hard to remember, or early 2021. It was right around there. I think it was end of 2020. But supply and demand, yeah. And, you know, it was cool, but things didn't start clicking until I started learning ICT. So long story short, the short answer to that question is I started, you know, looking at the markets and getting involved with trading in 2019. But I was just gambling. 2019 was just straight gambling, bro. There was no edge. There was no risk management. It was straight options. Not managing risk. Lost a lot of money. Market Maker Primer playlist is a must. Yep, Market Maker Primer is good. The problem with starting learning ICT is you just need to invest one minimum year. Yeah, it takes a lot in the beginning. If you're going through all the ICT's content, it's like you have to kind of trim off the fat in a sense, because he, like we said, he goes on these rants where it's just gold in the middle of the rant. And then he just goes back on a rant. And it's like, bro, just continue to give the value, brother. Like, I don't care about, you know, the thing that you're talking about right now. They'll just be ranting about crazy stuff. ICT 2022 model absolutely works. Nothing works perfect, right? It's a fallacy. There's going to be losing streaks. There's going to be drawdown. There's going to be lower frequency weeks, lower probability market conditions. Nothing is perfect. 99% win rate, 100% win rate. It's not out there. ICT speaks in one live stream more words than I say that. Yo, what's up, baby? The model works. It's all about probabilities. No ICT concepts. Exactly, Chris. Yeah, you just have to make it fit your personality and your mental game. Supply and demand is like ICT OBs. Yeah, it's very similar. At the end of the day, like I've talked about this before, I strongly believe that everything that we talk about at the end of the day is supply and demand, or support and resistance, not supply and demand. I think everything in a sense is support and resistance. I don't know why I said supply and demand. Like when it all comes down to it, you could simplify everything to just being considered support and resistance, because we're just finding areas of support to long off of, and we're finding areas of resistance to short off of. Now, all the other fancy names and whatnot, it's cool, but like at the end of the day, that's all it is. We're understanding smart money, order mitigation, and order pairing. We're understanding where price is going on the higher time frames, and buying at areas of support and selling at areas of resistance. I'm from Connecticut, United States. So I'm from the East Coast of the United States. Let's pull up the economic calendar. I've been kind of talking. I'm gonna take my time with this one though. No, I'm not in any rush right now. I enjoy talking to you guys, answering questions, and just getting to know you guys. It's a blessing to be able to do this and, you know, provide value. And, you know, if I add value in any way, that's very fulfilling to me. I can make this slightly smaller. Probably doesn't make a difference. You're from Connecticut too? That's crazy. Actually, Frank, that's sick. That's actually really cool. I don't have that many people that are like, I'm watching your channel and I'm from Connecticut. I think that's the first one. I love Connecticut. Connecticut's cool. There's nothing crazy here. I mean, it's nice. I like the fall. Summers are nice. The winters can be hit or miss. But I like the East Coast. New England's nice. I like our sports. I'm wearing a Georgia sweatshirt. I just got this from the thrift, but I like our sports a lot. I'm a huge Pats fan, huge Boston and New England sports fan. By the way, your videos from YouTube are awesome, and thanks for them. If you have something more in your pocket, please make. Absolutely. I want to go hard with the YouTube videos. So, Florin, expect a lot more YouTube videos on the way. I don't want to give my exact town. But if you want, you can DM me on Discord and I'll tell you. But I'm kind of doxing myself if I do that. Yeah, I watched the UFC yesterday night. I had Bones winning. Bones is different. All right, Monday. Let's talk about the economic calendar coming up, right? So Monday, we have no news. What do we always say about Mondays with no news? We say that it is lower probability. We say that there is a much higher likelihood of this being a lethargic, consolidating type day on a Monday with no news, right? So we're not expecting much. We're going to be highly skeptical of price action on a Monday with no news. It has to convince you, right? So if someone's doing the same thing over and over again, they need to convince you that they're a changed person, right? If I'm constantly, you know, doing something, lying or cheating or doing whatever, and I just say I'm going to stop, well, you're not going to believe me until I prove it to you with my actions. And so when I go into a Monday with no news, I like to give analogies like that because that's how I treat it. You know, Mondays with no news, their actions have showed me that they're not high probability. Their actions have showed me that they're not favorable. And so I'm highly skeptical of Mondays with no news, and I'm waiting for their actions, aka I'm waiting for the fair value gaps and intention of price to be shown before I actually believe what they're saying. So if the Monday is going to be a trade day, it's got to prove it to me, right? It's actions, not words. So I'm not trading on Monday unless it shows the intention to want to move, unless there's signatures in price that tell me, okay, it's time to trade. There's clearly, you know, volatility. There's clearly intention on this Monday with no news. Then I'll say, all right, I'm willing to put risk on. So I'm highly skeptical on a Monday with no news. I am willing to trade it, but I'm expecting it to be accumulation for the weekly profile, lethargic price action, low probability. More often than not, that would be the case. So I like to give that analogy about, actions, and it's not just words. You need to see it in the price action to be willing to trade. At least that's how I approach it. Anything that I say, I also want to talk about this because I see this all the time. Very, very common in this industry. People just take what one other person says, or someone they look up to, or someone they follow says. For example, ICT said, like, just because ICT said something, or I said something, or someone else said something that you follow or look up to, doesn't mean that you can't go into the charts and make a conclusion for yourself. I would highly recommend all of you to take the things that I say, take the things that I have concluded through my experiences and data, and take that to your charts and figure out if that applies to you as well. So through your experiences, you should be making decisions. Through your data, through your, showing up to these charts every single day. That is how you determine what things you want to be seeing and what things you don't. So just because I say, oh, be skeptical on a Monday with no news, or someone else says, I'll never trade a Monday with no news, doesn't mean you have to do the same thing. You might get burnt by the stove a little bit to learn these lessons, but I promise you it's very, very well worth it. And so make these decisions based on your own experiences. Right, be an independent thinker. Exactly. Be an independent thinker. Don't just, if I don't want to get all political, I don't want to get all ranty here, because I'm pulling the ICT with the rant right now. But if I just did what everybody told me to do, I would not be healthy right now. If I just followed like a sheep. And so I would encourage you all to be independent thinkers. Don't just follow what one person is doing because they said they're doing it. But that's my rant. All right, let me not be a hypocrite here with the rants. Monday, no news. That's my rant. Tuesday, we have British pound, Canadian dollar red folder. Okay, so those of you that are trading crosses, or maybe USD CAD or GU, we should have volatility on those pairs on those days, right? So Tuesday, intraday trading these Canadian dollar and pound pairs could be nice and could have volatility and energy. Wednesday, yen and pound, the same applies, right? We could have volatility and energy on those pairs. We don't have USD red folder news until Thursday, which is very, very interesting. So Monday through Wednesday on indices, on most of these majors that don't have any news, I'm going to be more skeptical, because price doesn't have the intention in terms of the economic calendar. It's not giving me signs that we want to move until Thursday on US dollar. So Dixie, I'm going to be skeptical Monday through Wednesday. If it shows the intention and wants to move, which it very well could, then cool. That's what I would want to see. Fair value gaps, intention, energy. But yeah, Thursday, USD red folder and Australian dollar red folder. Yeah, the unicorn model is fire. Which futures prop firm is best? I would say Top Step. Honestly, I think Top Step, My Funded Futures are good. Tradeify is good. Apex, in that order. But there's a bunch of new ones coming out as well. When it comes to prop firms, you need to be mindful of what you're getting into. Don't put all your eggs into one basket. I'm not sure if you guys saw the stuff with fast track trading. I never promoted them, but at the same time, for those that did, I don't think that they're like bad influencers. They don't know the business. The point I'm trying to make here is just understand the risk that is going to be taken when you're going into these prop firms, right? There's always going to be risk. There's risk in everything that you do. So just diversify, like anything, right? Like with trading, we diversify the assets that we look at. You want to diversify your investments. You want to, diversify when it comes to prop firms. So don't just be invested in one prop firm. So for those that were fully invested in fast track trading, well, it's not looking good and they have to adjust now. So the point I'm trying to make is there's tons of new prop firms coming out. There's tons of new futures firms, Forex firms coming out. Try to do your due diligence and don't put all your eggs in one basket. So if you're getting into trading prop, understand that there is risk. These firms, these businesses can go down. And the people that are promoting them, like I saw people promoting fast track. I'm not going to drop names. And I don't think that they're bad people. They just don't know the business model. So yeah, the point is understand that there's risk, right? These businesses can go down. Fast track trading went down. I think that was a straight up rug pull. That wasn't like a failed business, really. That was just malicious intent, bad thing for the community. But yeah, just understand the risk, right? Make sure that you're never going to get fully burned by a prop firm going down. I'm going on these little rants, but there's value in them. So it's not just me ranting about egotistical stuff or things that don't have value. Friday, British pound, euro, Swiss franc, Canadian dollar, and USD. So USD, Dixie has Thursday and Friday red folder. That's it. Monday, Tuesday, Wednesday, I'm skeptical. Thursday and Friday, I would expect more energy and expansion on USD. But yeah, economic calendar as our roadmap. Now let's get into the actual forecast. I'm taking my time today. I'm trying to, just be open and honest about whatever you guys are talking about, provide value in all areas. I also want to make it clear, you can see on the right over here, it's a little bit chopped off on the percentages, but I removed the crosses from my forecast. I'm going to just go through everything that is right here on this list from here on. I just don't think it's necessary for me to go through the crosses. I have the majors, and then I added Bitcoin because Bitcoin's been printing. I know people want to see some crypto analysis. I'm not a huge crypto guy, but I will do the analysis on it because it's been flying. So why not? And people have been asking. So with that being said, very first thing that we do is start with the US dollar, because the world power, the world currency, right? So US dollar affects everything. Dixie is extremely important to understand. And so we start on the monthly time frame. We work our way down because the time frames are like a hierarchy. So just marking out some areas of liquidity, right? I don't trade off of the left. I won't take trades off of liquidity over here, but I will use it as targets and understand that once major liquidity goes, we can get retracements. And so this is a major liquidity pool. So now I want to see if we're retracing. Just based on this monthly, it looks like based on this wick, we may be retracing here. We have this next target right here on the monthly, which if we continue to expand on the lower time frames, would be my next target. 12 days on this monthly candle. We're on the third candle, creating a bullish fair value gap, BISI, whatever you want to call it, but it looks like it's a breakaway gap. Right? I'm not expecting a retracement all the way down here on the monthly. That would be unfavorable to head higher. I would just expect us to continue higher. So these are our liquidity pools, targets, whatever you want to call it. Now, well, we delivered off this. I'm not worried about this. This price action has already been delivered efficiently. All I'm ever worried about trading off of is the most recent price leg. We don't have a fair value gap here on the weekly. We took this liquidity and now we are having a reaction where we might want to retrace. From that retracement, we're going to be gauging whether or not we head higher or we begin to retrace deeper, right? So you guys see the logic behind what I'm doing. From the top down, I'm just working my way through. So there's not much to pull from the weekly current leg. We do have this fair value gap here, but again, looks like a breakaway gap. Let me go back to the monthly. This hasn't formed yet, so I'm actually going to remove that. This did form, but again, it looks like a breakaway gap. So now we're sweeping this liquidity. Well, right now there's a body close above, but the way this reaction looks, it seems like there could be a retracement. Now we're trading into this daily gap. So this is where I want to be gauging. Do we just continue higher from here? That could very well be the case. If we just continue higher off this daily gap, I'm looking at that next target on liquidity, right? So this gray line here. If this daily bullish fair value gap fails, then I'm expecting a deeper retracement. Right now, we're wicking, we're respecting it, so we have a move from daily internal to external. My low-hanging fruit target would be this daily buy side, and then from there, if we continue, which we should, I'd be looking at this buy side. So those are my next two targets, assuming that we respect this daily bullish fair value gap as we look like we are. So daily internal to external, respect of that. 4 hour is interesting. Kind of just consolidating. We have this bearish fair value gap here. We're respecting, just messing around. But yeah, that's pretty much my analysis on dollar. I'm still bullish until proven otherwise, until we get that shift. But we could potentially dig deeper if this daily leg doesn't hold. I'm expecting it to hold based on the way that this candle looks. Right, this wick is indicating a sign of respect of that daily internal range liquidity. So I'm looking at this again as my low-hanging fruit, and then that buy side is the next draw. So bullish on dollar, expecting higher prices. If I'm bullish on dollar, then I'm looking at EU, GU, AU, and NU to trade inversely or bearish. And I'm looking at UCAD, U Swiss franc, and U yen to be bullish potentially and trade higher, because they trade directly correlated to dollar and these trade inversely correlated. Indices. Monthly, very clearly bullish, right? We want to submit to that higher time frame trend. Interestingly, right here, right, we are sweeping this monthly high, this previous month's high. So a really, really strong retracement last week. Traded into this area here that I was watching. You know, for those that are in the Discord, I was saying live on the stream, this is a key area of support here, right? This is a key order block, discount array, area for value, whatever you want to call it, man. It's an area where we could find support and continue higher. Now I want to submit to that higher time frame trend. Because the monthly is bullish, because the weekly is bullish, the higher time frame is all pointing higher. We want to submit to that trend until the order flow says otherwise. So I'm not just flipping bearish here because we had a strong retracement. Obviously, this is a very strong bearish candle, but we're still at an area where we can find support. So I'm not ready to just flip bearish yet. If we continue to get these large candles lower, disrespecting this area of fair value, pointing lower, then I would actually look to target this sell side down here. But for right now, I want to just gauge price. I need more price action. I need more information from indices right now to say conclusively what I'm thinking. But gun to my head, I'm still bullish, right? I want to submit to this trend. If we shift again, and I always talk about flowing with price, it's not about being right or forecasting really. I do these weekly forecasts because I think that they're good value and, you know, it's good for you guys to see and learn. But I don't care, right? If something is 50-50 to me and I end up, you know, being wrong about where it's going, that's fine. I'll get on side. You know, an edge is simply just being able to get on side consistently with the markets. And so even when I'm wrong, I'm able to be right again and get back on side. But again, it's not about being wrong or right. So yeah, if we don't get that reaction from this area of support, right, this area of fair value where we can potentially head higher off of, then I'm going to be looking to target this sell side. But I need more information. I'm not just looking at shorts right now. So right now we're just kind of 50-50 to me. You know, I'm leaning bullish still. I would expect us to potentially find support and shift, but I need more information. I need more out of price right now to conclusively make a decision. So I'd put that on the wait list. Then we'll see, right? Like I just broke down. Do we find support here at this area for value and begin to shift and point higher? Or do we just continue to disrespect that area and point lower? You know, if we just continue to dig extremely deep, then we're going lower for a sell side. NQ dug way deeper, which is not ideal, right? But NQ as well swept this monthly high here, this buy side. You have monthly bullish order flow. It's going to be the exact same analysis pretty much. NQ just had a much deeper retracement into this OB. If we do end up shifting, then cool. You know, we're going to look to target that sell side. So we'll see. But I'm pretty 50-50 here. But yeah, exact same analysis. You know, if we begin to shift, 4 hour, 1 hour, 15 minute begins to point higher and we're respecting this area, then I'm going to be looking to target this high again. And I think we're going to all-time highs. If we just continue to invalidate this area, point lower with fair value gaps, continue lower, then boom, we're targeting sell side. And we may actually be flipping here. So we'll see, right? I'm just going to be reacting to price. But as of right now, I need more information. Let's see if YM and RTY are showing anything here. Okay, so YM didn't have that deep of a retracement here, which is interesting. You know, this is the type of retracement that's not as bad as this. You know, they're still not ideal. Like when we're extremely bullish, you don't want to see a strong retracement like this creating a fair value gap. You just want to see like a nice little consolidation, tag into the gap and create new gaps off of it. So this isn't favorable, you know, retracements like this, and it does definitely gives bad vibes. Not ideal, but it's interesting to see that YM created a fair value gap still, and we're at this area of fair value as well as this fair value gap. Interesting stuff here on YM. Same analysis, right? We're at an area of fair value. If you guys don't understand fair value, I'll explain it very briefly here. Buyers get involved in the market, sellers get a fair chance to get involved in the market. Now we create a new imbalance, right? Buyers are involved here, sellers didn't get our fair chance. So we're retracing to this area of fair value. From here, all of this price action has been delivered efficiently, meaning buyers and sellers have gotten a fair chance to get involved in the market. If that's the case, right, and this is irrelevant essentially to price action, then we should head higher. I don't know why it's not. Hold on. We should head higher from here. This area of fair value should send price higher towards this buy side, because that's all that we need to deliver at this point. And this should be an area of support. If we do not do that, right, like I talked about on ES and NQ, and we just create new gaps lower, we disrespect this area of fair value and fail to offer fair value successfully, then I would be looking to target sell side. And so that's it. Those are my thoughts. Like, simple. Do you see how simple it is? It's if this, then that, always. And it's just a constant flow with what the order flow and the gaps are saying. It's a constant flow with where these gaps are pointing. And it's just flowing with price action. I don't get my ego attached. I don't worry about being right or wrong or even losing or winning trades. It's just about, okay, cool. Where is the market going? How can I get involved? How can I stay on side? Oh, this didn't happen, so now I'm looking for this to happen. Oh, this happened, so now I'm looking for this to happen. Like, that's it. That's really all it is. And so that's what I'm trying to get through to you guys. And I'm doing this all with a gray box and a gray line. Do you see anything else on my chart? Like, I don't have any indicators. I don't have standard deviations. I don't have anything. You know, if I wanted to, these drawings down, you can't even see them. Let me move it up. If I wanted to, these drawings down here, I could literally just do this and this. These two. And be good. That's it. All this other stuff is just for teaching. The risk reward tools are helpful though, I will say. Like, this is extremely helpful because then you can just boom, pop it in, create the order. But I don't need it, hypothetically. But yeah, same thing. You know, all indices are going to be similar analysis. Interesting to see that YM is still creating that bullish fair value gap though, but it's right at that area of fair value. So interesting stuff. We'll see what happens. I need more information. I need more data. White screen, white charts. I like the color white a lot. I like white and black. Those are my two. I like white, black, and red. Those are, like, as you can see. My room's white, red sweatshirt, black beanie. I like white, red, and black. Those have always been my favorite colors. Monthly. This is sloppy on the monthly. Again, sweeping this buy side. Yeah, this is a strong rejection. This is not good. So this is exactly what I mean by a low probability fair value gap. Right? When we create these fair value gaps, you would want to see us have a small consolidation, not a super strong retracement like this. This is not ideal. So some red flags here, and I just need to wait on indices, right? If we do dig into this, we get a strong shift, and then the 4-hour, daily, 1 hour begins to point higher, then cool. You know, I'm ready to look for these longs again towards buy side. But the way that this candle's forming is sus to me, very sus. So I'm just waiting for more price action on indices. But I wanted to go very in depth there so that you guys can understand what I'm seeing. Creating new daily bearish fair value gaps as well towards this area here. But just waiting. That's all it is at this point for me on indices. In terms of the higher time frame, like understanding where the higher time frame is going, I would need to wait. What is your entry time frame? It depends on what I'm doing. If I'm swinging, 1 hour, 4 hour daily. If I'm intraday trading, mainly 5 minute and 1 minute. But I can, you know, do whatever I want, you know. And again, I'm not trying to sound like egotistical. It's like that's how it is. Like, I can do whatever I want. Do I want to swing? If that's the case, I'll enter on the 4 hour, the daily, or the 1 hour. If I want to scalp the intraday or just catch small fluctuations intraday, 5 minute and 1 minute. So I can do whatever I want, you know, using all the things that I'm teaching. It just comes down to the entry time frame, the higher time frames above that, just the entire way the time frames are formulated together, the way you put them together, the way you enter, what you use for narrative and draw on liquidity, all of that comes together to give you a style of trading, whether it's intraday, swing trading, scalping, all of these things. But price is fractal. All right. EU next liquidity target is here. We are clearly displacing below this low. Once we traded to this low, at the time I was saying we need to watch. So I have to blow, or not blow my nose. I just had to wipe my nose. We need to watch this swing low and see, do we expand through it, or do we have a small retracement here? Do we have a retracement to continue lower? Because these major liquidity pools often cause retracements like that. Well, what we can see here is a very clear disrespect, a body close below. And so it's showing intention lower, right? Price is showing that intention to want to just keep expanding lower. So it's weak. And so we look at this next liquidity target and the exact same thing applies. We're showing intention lower. We're not showing any willingness to want to retrace yet. And so I'm expecting lower prices. Next liquidity target down here, this gray line. This weekly, it formed, yes, but it's a breakaway gap right now. So I'm not looking for this to get retraded to at this moment. You know, we're much closer to the sell side. We have very, very weak, signs from price action. So we're not expecting a bullish retracement right now to there. So I would actually expect this daily bearish fair value gap to hold. Very, very similar analysis on dollar, right? I feel the exact same way about dollar. This is my short-term draw, internal to external. From there, I'm looking at this next sell side target. So it's essentially dollar analysis inverse, right? EU, GU, they move very similarly to dollar, just inversely correlated. Okay, so bearish on EU actually has nice context. We'd add that to the short list. It looks nice. GU going to be similar. Next sell side target. We took this sell side. Weekly breakaway gap. No new gap here, just expanding lower. Clean delivery here though. Daily, no new legs. Wouldn't really expect a retracement up into this right now with how dollar should be expanding. So I just expect lower at this point right now. Potentially off one of these 4-hour premium arrays. Monthly is pretty sloppy here on AU. Same thing, inversely correlated to dollar. Weekly, internal to external here was really nice. I mentioned this in the Discord before. This was really clean when that was playing out. But now we're continuing lower, right? We're showing intention to just expand lower. Still weak. We have this daily context setting up. Looks actually really nice. Add that to the short list. We have strong dollar. We have weak EU, GU, AU, and NU. We'll see if this wants to expand lower. Is there a 4-hour gap here in this leg? Or just consolidating? So potentially we want to trade into this, but we would just be reacting to the 1-hour and 4-hour fair value gaps. Do they point higher towards this daily gap, or do they point lower and just say breakaway gap on the daily? That's how you need to be reacting. So do you see how everything ties into each other? If I'm looking for this daily SIBI to act as a draw on AU, well, then I'm dropping into the 1-hour, the 15-minute, the 4-hour, and I'm reading the order flow on those time frames and the fair value gaps on those time frames to see if they're pointing higher towards it. If the 1-hour and 4-hour just continue to expand lower and create bearish fair value gaps, well, then we're not looking at this daily gap right now. We might just breakaway gap and continue lower towards the sell side. And so you're just constantly reacting. You're constantly reacting to price action. If we point higher, bullish fair value gaps, boom. SIBI right here is a draw. AU didn't tag it. Interesting, but it's close. Monthly took this swing low. Next swing low is here. Sweeping it right now. Interesting. So I'd be looking at the way this body's closing, the way we're sweeping that sell side. I'm looking at this. Do we expand lower off of that? If so, then we're targeting this liquidity most likely. If we fail, then we might be retracing deeper. 4-hour and 1-hour. Kind of just consolidating, but right now it's pointing higher. Interesting stuff. Canadian dollar, USD Canadian dollar. Monthly breakaway gap hasn't formed yet, so I'm just going to remove it, but just understand that I'm anticipating that. Trading above here. Weekly, I'm just going to remove that. Traded higher off this weekly BISI. Really nice delivery. High probability price action. What does it do? It creates fair value gaps off of fair value gaps. So we trade into this bullish fair value gap. Now we're likely creating a new bullish fair value gap. So when we create that new weekly context, you want to be capitalizing on that and looking to trade this on USD Canadian dollar. It's been extremely bullish. This is very high probability expansion. So when we have this new context forming, you want to be looking to long this on the weekly. Just expanding right now, breakaway gaps. But yeah, very, very bullish. Is there the next liquidity isn't the next swing high isn't until up here. These are going to be swing highs on the daily, but damn. We'll see, bro. This thing's flying though. Interesting stuff. USD Swiss franc. Right now, we're not respecting these bearish fair value gaps. We have bullish dollar, which means USD CHF should remain bullish, right? So we're looking at this buy side, and I'm looking for this to be a failure to offer fair value. If we continue to expand and point higher on the daily 4 hour, we're targeting this buy side. This is an example of where we have bullish dollar, so that makes sense why this isn't heading lower right now. And we're failing to offer fair value at these monthly SIBIs. So we're looking for this buy side now, because if we're failing to offer fair value, we're seeking opposing liquidity higher. So I'm bullish on USD CHF as well. Weekly breakaway gap showing even more strength. Daily, do we have gaps? We do. I like this retracement. This looks nice. Actually could be really nice daily context. I'm gonna get rid of all these other gaps because it looks terrible. Let me so what I do, if you guys haven't done this, go into your templates. Can you guys see this? Let me pull this up like that. All right. So what I do is I'll click a fair value gap. I'll make a template for the time frame that I want it to be transposed to. So for me, I like to keep all my time frames clean. So if this is a monthly time frame, well, I have a template in the visibility boxes checked to only show this on the monthly, because I don't want to see this on the daily, weekly, 4 hour, or else it just looks all clustered and gross, and it stresses me out. So make templates like that if you guys want. Highly recommend. The reason it's like it looks so ugly is because these are like the way that they're organized is so that it's in order. They need to add a feature where you can just drag and drop the templates where you want them. It's kind of stupid they don't have that. But yeah, daily context looks nice. I like this. Potentially something like that if we continue lower. Interesting that the 1 hour had a bullish for value gap here, so we'll see. UJ monthly bullish order flow. Hunted this sell side. Notice how there's just a lack of a fair value gap here. When there's a lack of fair value gap in the price leg, it can be hunted like this. You know, even price legs with fair value gaps can get hunted, but it's just a much lower probability to happen. Something like this makes a lot of sense. That's why you want to submit to the monthly order flow. So we hunted this sell side. Monthly is creating that bullish fair value gap. Weekly, trading higher off this BISI. Now we're getting a pretty strong retracement here, which is interesting. So we'll see if we want to continue higher from here. This is an area of fair value. If we continue lower, disrespecting it, then you would target the sell side. but I think that we can continue higher here. Still bullish. Strong retracement though. And if this was high probability, you would have wanted to see that expansion fall through and create a new second candle body with an expansion. So we'll see. It could go either way. We'll be reacting to what happens here, similar to exactly what I explained on indices. You can do both, friend. They're both really good. For value gaps, keep it very simple. At the end of the day, you're just waiting to view an order flow shift. So like it's just order flow flipping. I call them offs. It's just an order flow flip on whatever time frame is aligned with the PD array you're trading off of. A unicorn is just like a specific type of way order flow changes. Like it's an entry model essentially, but you can do both, whichever you prefer. So I was also looking from here in yen because of USD. Yeah. Crude oil, commodities. Crude oil has been sloppy, man. Sloppy. Not ideal delivery here, but you have these next liquidity targets. Go ahead and mark these out. Sloppy, 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 but damn, this thing dropped. Tagged into the daily SIBI, respected, pointed lower. Mentor of the year 2024, love from me and the entire African new traders. Appreciate that, man. That's so, I love that. Thank you, man. Appreciate the kind words. Four-hour SIBI potentially can head lower off of this area here. 2, seek that sell side, and then from there we'll see if we continue to trade lower towards these other sell side targets. But it looks bearish. Obviously, we have bearish order flow. Sloppy delivery though, like really, really gross delivery in the middle here. This is kind of how crude oil acts. I don't necessarily love it, right? We'll go through these periods where we just mess around, troll, and then it just flies. Mess around, fly. Mess around, fly. So I don't love it. But when you do get involved in these nice expansions, it can be really clean. So a lot of these instruments have different personalities you have to get, familiar with. The same way you meet different people, they have different personalities. You have to understand where to tread lightly, how to approach them, and how to operate and maneuver their personality. That's how trading is. That's how trading different assets is. The way that you maneuver around crude oil and the way that it acts is different than how you would maneuver around indices or crypto like Bitcoin or something. So all these different instruments have different personalities. Monthly BISI on gold. This is an area where we can find support, but I'm not just flipping long until we get that confirmation, that order flow flip pointing higher, right? So right now the order flow is still pointing lower. We haven't gotten any signals saying it's time for longs. So this is something I was talking about with my buddy Chris, right? I don't know if he's still in here, but very important to understand. When we're at areas of support or areas of resistance, yes, we're expecting and anticipating that flip of order flow. But if price doesn't give that signature and we just continue to trade lower, well, you can still operate and maintain that bearish bias, right? So I'm expecting a potential flip of order flow. I'm expecting a potential, reversal here, anticipating that area of support. But until we get that signature in price pointing higher, confirming that we're actually finding that support, well, then you submit to that short bias. So monthly gap can find support here, can wick. We still have 12 days on this monthly candle, so we very well can close this monthly candle respecting this monthly BISI, which is what I would personally expect and anticipate. But until we get that shift and until we get those signatures pointing higher on the 4-hour, daily, 1 hour, etc., well, that's off the table. So we have this weekly breakaway gap, strong retracement on gold. Daily still bearish, daily still pointing lower. Losing some steam though, for sure. Definitely losing some steam. That's what you would want to see at an area of support. And yeah, we'll see what happens here with this daily gap. We may trade into this daily gap. I would not be surprised if we flip it and then shift. But if we respect this daily gap and continue lower, cool. Look at the sell side. And we're not finding support in the gap yet on the monthly. Yeah, I'll look at GN for you. But those are my thoughts on gold. So again, need more from price action. I'd be waiting. If we trade into this daily gap, potential short context if we get the signatures pointing lower, but we very well can flip. Again, we're operating within that monthly bullish fair value gap, and so we can flip and begin to shift higher. If that's the case, you have an entire month of bullish order flow, bullish draw, right, to this buy side on gold. So you want to be favoring longs and looking to long discount arrays on gold the entire way through. Silver, similar monthly bullish order flow, weekly potentially shifting here, creating this weekly bearish fair value gap successfully here. Daily bearish order flow, trading lower, losing some steam though. Similar analysis, right? Gold and silver are correlated, so if we get a flip, then cool, we have some monthly context to operate within. If not, we can continue to frame shorts and metals will continue to be weak. Bitcoin has been absolutely flying. This internal to external played out, but it was disgusting the way that we just wicked. But look at the bodies telling the story, right? Bodies tell the story. Look at this. That's beautiful. Look at the way the bodies respected that bullish fair value gap. Look at the way every single monthly candle wicked out of this bullish fair value gap, and the bodies told you that story, that we still want to head higher. That's really, really nice. Now we're expanding all of this, right? From here up, we should continue higher. This is our area of fair value, right? Price has been delivered efficiently. We've just been expanding. Weekly bullish breakaway gap, daily consolidating. Interesting. We do have this daily gap down here we could potentially trade into, but who knows with Bitcoin right now. We're just consolidating, so I'll just be waiting. I wouldn't want to see a deep retracement into this though. The way this daily or the way this weekly candle closed, would just expect it to potentially continue higher, so we'll see. GBP yen. GBP yen is within this monthly SIBI. We did have a body close within it, not favorable, but we want to see how price is reacting here from this monthly internal. Weekly strong retracement, failed to create new fair value gaps higher. The daily looks like it has shifted, so you may be trading lower and having some nice monthly context here from this monthly SIBI. For me, with a swing, I would be waiting for this new daily fair value gap. From here, this would be something nice that I would be looking at. We have a lot of liquidity here. This is a nice signature in price to see that we can potentially go trade lower. So I'm looking for shorts here. It looks bearish to me, but I'll be waiting a little bit. I want to see new daily gap. I want to see, you know, straight into this, and then potentially could short that. What are the other yen pairs saying? Let me check this out. Yep, similar. Yeah, we got nice monthly internal to external, beautiful reaction here. Euro yen looks better. I like Euro yen better as of right now. This looks nice. Which out of Euro and GBP is weaker at the moment? That's what you want to understand, because it's the base currency. Okay, so GBP is weaker. Interesting. Let me pull up the Forex list. Do I not? I deleted it. Did I delete it? I didn't delete it. Wait, that's currencies. All right, boom. Let's look at these yen pairs. I'm interested now. Monthly internal, weekly, daily gaps lower potentially here. Yeah, these are all looking extremely bearish from the monthly gaps. Beautiful respect. I like this a lot. Yeah, these yen pairs look nice. Not gonna lie. These yen pairs look nice. Oh, this looks so nice. This looks so nice. Hold on, man. Looks really good. Yeah, yen pairs look good for lower. Very nice, very nice. Big fan of yen. XXX yen shorts. Yeah, that looks really nice, guys. For those of you that are trading Forex, eyes on that. It looks really good. So Forex looks like it's cleaning up a little bit here. But yeah, that's pretty much it for the forecast. This is what we're looking at. This is what we're seeing. Hopefully there was some value in here. If you guys have any other questions you want me to run through while you have me here, I'm happy to answer. For those of you that want to potentially join the academy, I offer a free trial so you guys can live trade with us for 7 days. I also do analysis in there. I'm answering questions, mentoring everyone within the community. So definitely check that out. Come live trade with us this next week. But yeah, I think that's pretty much it. All right, well, I'm gonna wrap it up there. I hope you guys have a good rest of your day. Make sure that you get locked in for the next week. We're gonna have a nice next week, so stay locked in. All right, appreciate you guys, man. Have a good rest of the day.